India's biggest airline? Suddenly under pressure? Something serious has happened at IndiGo, and today's update might completely change how you see the aviation sector. Let's break it down. Welcome to Wealthy Click's daily financial updates, where we decode the stories that impact your money, your investments, and your financial decisions. If you're an Indian investor who follows the stock market, SEBI updates, and market insights, you're in the right place. IndiGo has long been India's aviation giant, the largest market share, ultra-low-cost operations, high on-time performance, a massive domestic and international network. For years, investors considered IndiGo a safe and stable airline, but markets never stay the same. Behind the scenes, cracks started appearing, and they weren't small. They were industry-level structural cracks that even a dominant airline couldn't escape. Aviation is a brutal business. As experts say, when the world slows down, airlines are the first to bleed. And IndiGo has now reached that phase. One of the biggest blows came from jet fuel prices, which make up almost 40% of an airline's total cost. When global crude oil prices spiked, IndiGo's operating cost went through the roof. To understand the scale, if your average domestic flight ticket is Rs5,000, almost half of it goes directly into fuel. So when fuel becomes expensive, either raise ticket prices or suffer massive losses. IndiGo couldn't raise fares aggressively due to competition, so margins started dropping. Investors noticed the pressure immediately. The stock turned volatile as analysts flagged shrinking profitability. Fuel prices alone were enough to shake IndiGo, but more trouble was coming. After COVID, travel had recovered well, but in 2025, global economic slowdown changed everything. Across India and globally, corporate travel reduced, families postponed holidays, international bookings softened. Domestic markets saw intense price wars. IndiGo's planes kept flying, but load factors weren't as strong as expected. This meant lower revenue per seat, higher operating costs per passenger, and shrinking profit margins. The message was clear. Demand wasn't matching capacity. IndiGo also faced multiple operational challenges: engine supply shortages, aircraft grounded for maintenance, delays due to technical checks. Over the past few months, several aircraft were temporarily grounded, reducing capacity and increasing operational cost per flight. Industry experts called it a management challenge. IndiGo was expanding faster than its maintenance capacity could support. Passengers faced delays. The company faced rising costs. Investors faced rising concerns. For years, IndiGo dominated Indian skies almost unchallenged. But today, the landscape is very different. Air India is aggressively rebuilding. Akasa Air is expanding rapidly. Vistara has a strong premium segment, and SpiceJet continues discount-driven competition. More airlines equal sign, more offers lower ticket prices, lower margins. IndiGo suddenly found itself having to defend its leadership, something it wasn't used to. Now let's talk about today's major update. The reason investors are watching IndiGo closely again. According to the latest information, IndiGo is focusing sharply on cost optimization. The company has avoided layoffs, which is a positive sign. Fleet utilization is being improved, international expansion is being slowed temporarily, and the company is entering a wait-and-watch mode regarding future demand. Analysts say if fuel prices stabilize and if demand normalizes, IndiGo could become one of the fastest airlines to recover. However, the risks remain. Fuel price volatility, global economic uncertainty, intense fare wars in India, technical and engine-related challenges. This mix makes the stock particularly sensitive right now. For short-term traders, IndiGo remains a high-risk, high-volatility stock. External factors like fuel and global demand swings can move the stock sharply. For long-term investors, yes, IndiGo remains a strong company with powerful brand value. But entry price matters, and exposure should remain limited. Aviation is a high-risk sector. Diversification is essential. The IndiGo story gives us one powerful lesson. Even market leaders collapse when external factors turn against them. That was the full breakdown of what went wrong at IndiGo, and what today's update really means. If you enjoyed this analysis, make sure you like, follow, and subscribe to Wealthy Clicks, because we bring stories like this every single day to help you become a smarter Indian investor. Tell me in the comments, do you think IndiGo will make a strong comeback?